Good afternoon, everyone. My name is Pamela Fountain Brown with the Lakeside Alliance. The Lakeside Alliance is a joint venture team which is made up of Powers and Sons Construction, Ujama Construction, Brown and Moment Safeway, and Turner Construction. We are the selected construction managers for the Obama Presidential Center. And we, for the past month, have been hosting Lunch and Learn series with local partners who have programs which would benefit diverse and small businesses alike, because it is our desire and commitment to make certain that we are making available to contractors or any organizations who want to learn more about the opportunities for the Obama Presidential Center, that you have access to this information. So today we are joined by Deborah Whitaker from HIRE360, who's going to give us a lot of great information about their loan pool fund that they have available for contractors. Deborah has been really integral in being able to be part of these conversations with small businesses and making certain that they are aligned to be in a good position to actually get the resources that they need. So with that, Deborah, I'm going to turn it over to you.
Okay, thank you, Pam. Hello, everyone. I'll give you a little brief information about who I am and my background. My name is Deborah Whitaker. I'm the Director of Business Development for HIRE360. I have worked with small businesses for the last 15 years, start off as a consultant, and then I've done technical assistance for the last maybe 6 years. I've worked with the Illinois Tollway doing technical assistance with them, and then I've been with HIRE360 for 2 years now, providing access to capital and any type of technical assistance that's needed for small businesses. We started off in December of 2019, where we actually formed HIRE360, or launched it. When we started HIRE360, we determined there was a meeting between the major developers and GCs in the city of Chicago, along with the Chicago Federation of Labor and minority subcontractors. And because there's about $100 billion in what we call mega projects that are going to be happening over the next 10 to 15 years, there was a question that was raised as to whether or not there would be enough minority participation for us to be able to have enough subcontractors to actually be available and have the capacity to take on 26 and 6, which is what we started off with, 26 minority business participation, 6% women owned. And then a couple of the projects actually got increased where it was 30 and 10, 30% minority business participation and 10% women owned business participation. So when the question was raised as to whether or not that capacity with minority businesses existed, the answer was no. So HIRE360 was actually formed as more of a solution to that, to help to scale up the businesses so that they would build their capacity and then be able to actively participate in those billions of dollars of projects over the next 10 to 15 years. HIRE360 has 4 pillars altogether. As I said, business development is one of our pillars. The second pillar is workforce development. The third pillar that we work with is supply chain. 40% of most contracts or construction projects is on spend on material. So there's a great amount of opportunity for diverse suppliers to actually participate in these projects over the next 10 to 15 years as well. And the fourth pillar that we have is youth engagement. So as I started explaining to you guys, when we looked at what some of the challenges are in scaling up businesses, one of the major challenges for minority businesses, irregardless to what industry, but definitely specific to construction, one of the major challenges is access to capital. So we launched HIRE360, as I said, in November to December of 2019. We actually did a fundraiser where contributions were made from some of the private developers, Chicago Federation of Labor and others, and we raised about $855,000 in capital. The purpose of raising that money was to be able to provide collateral for some of the smaller businesses that would not have the capacity to maybe go to the banks and get loans or lines of credit on their own. So we wanted to make a commitment to provide collateral for some of those businesses that did not have those relationships already. So we started off with 7 loans that we actually provided to 7 different businesses that covered from $10,000 of a line of credit up to $500,000 line of credit. Since then, we have been scaling up those businesses and recruiting new businesses. And to date, HIRE360 has 92 minority businesses that we work with. And we've accomplished 32 loans that are either have been actually approved or in the process of being approved to the tune of about $5.5 million. We also worked with CRF, which is on this the webinar with us, Maureen McKenna. We partnered with them and we helped with the PPP, which was very critical for a lot of businesses for them to be able to keep their businesses going. We worked with possibly over 30, I think it was about 35 to 40 businesses in total, and a little bit over $3.8 million that we assisted some of those businesses in being able to get the first and second draws of PPP loans, which helped to keep them, with their employees during the height of the pandemic. So I'm going to try to share my screen so that I can actually, give a little bit more detail about HIRE360. Let me know if you can see my screen. Someone can say yes if you see it.
We still see you.
You still see me?
Mm-hmm.
Okay, not a good thing. Hold on. All right. What about now?
We're good. Yep.
Okay. All right.
Yes.
All right, great. So I'm just going to kind of give a little bit more of information. So as I said, HIRE360 Business Development mission is to create and grow viable, self-sustaining businesses through access to capital, procurement opportunities, compliance, technical assistance, business networking, and other tools. HIRE360 had made its initial priority access to capital for minority businesses, specifically in the construction trades that are in the most underserved areas and yet the hardest impacted from economic downturns, such as the housing crisis that happened in 2008, and of course the COVID-19 pandemic. HIRE360's business development program provides thorough vetting and preparation for financing, assisting small business owners who may have credit challenges, collateral gaps, or limited experience with financial management so that they are ready to apply for, secure, and manage the capital that's needed. We provide the working capital for projects to pay weekly payroll and material expenses, which also increases their contracted opportunities and their business capacities. HIRE360 performs an initial financial review for financial statements, tax returns, current contracts, et cetera, to assist businesses with the required loan documents prior to submittal to the lender. So what we do instead of the lender actually having to piecemeal, chasing down the businesses to get all the needed documents in order for them to consider them for a loan, we make sure we get those documents on behalf of the businesses and compile a full package. And then once we turn that full package into the lender, that saves a lot of time and energy, and it facilitates them more readily being able to actually determine whether or not that contractor or that business is qualified for that loan. We also encourage and include a capability statement or a profile of the business along with the business owner's resume as a way of introducing that business to the lender, because the more the lender knows about that business, the more comfortable they are in making a decision as to whether or not they want to take the risk or establish the credit line for that business. So that capability statement generally gives them information on some of the previous projects that they've held, what their NAICS codes are, and just more of an overview of what type of business that they're dealing with. All loan pool participants receive ongoing technical assistance in key administrative areas. One of the most critical things that we found in us assisting or being more of a liaison between that lender and the business is that a lot of times, the businesses are not aware of what they don't know. So they're not really very well equipped in understanding their financials, understanding that their balance sheets, that they're not reporting negative equities, which means that their liabilities are far exceeding their assets, and now they have to show negative equities in order for the balance sheets to reconcile. So those type of things that we can actually help them to understand. And a lot of times we run into clients that maybe don't have the best accountant to present their financials, on their behalf. So we'll make a referral when we see those situations to some of the accounts that we have in our referral base that we have confidence in that could help them to make sure that they have really good documents. The back office, which is what I'm describing, where accounts payable, accounts receivable, is being tracked, and that all of the balance sheet accounts are being reconciled. This information is pertinent towards banks being able to make a legitimate decision as to whether or not that company is viable or not. And so my taking a look at some of this information, I have an accounting degree and accounting background, and is well versed in helping them to understand all of their financial statements. But taking that first look, and I can actually see some of the red flags before they actually submit the documents, and kind of help them to cure some of those things before they actually submit it to the banks. We have established, as a part of our loan pool, a monitoring committee. We call it our loan pool committee of construction executives and CFOs. And we meet monthly. The pertinent part about this committee is that, it's made up of some of the major developers that are part of the mega projects, as well as their chief financial officers. And when we get together and we talk every month about the loans that we're actually have submitted and the status of the loans and the repayment of the loans, it gives us an opportunity to see if there's any things that are needed on the part of the developers. Maybe a contractor is running low on projects, and yet we've assisted them in getting a loan. Then now we can help them to get more projects. Because we got some of those people sitting at the table and say, well, these are people that we've helped to get lines of credit. Let's help them to get more projects so we can actually keep the line of credit revolving, which is another thing that we actually show contractors how to do. Once you get the line of credit, how do you keep it revolving so that you can actually show the repayment process? We restrict the lines of credit that we've helped our contractors with towards working capital. That working capital is already accounted for in the company's estimates that they've given for the projects that they're working on, so that, as we stated earlier, it becomes a gap filler. So if it takes 90 days, 60, 90 days in order to get the first payout from your project, but you're making weekly payroll amounts and having to do material costs, then now that line of credit comes in handy, because now it enables those businesses to make those weekly commitments while they're waiting to get paid on their projects. So it serves a tremendous purpose for them. The other services that we are providing is that, as we're looking at the back office, which is truly the structure or the foundation of any business, if we determine that some of the companies need additional help and maybe setting up their chart of accounts, then we are able to also, not only, like I said, facilitate and helping them to get the line of credit, but now we can actually help and facilitate them in getting their back office in order. So we have a grant that we receive, and we're providing the first $1,500 to businesses to actually have bookkeepers. They're working for a CPA firm, and we have a couple of them that we're engaged with right now to go in and look at, like I said, if they're using QuickBooks, whatever the accounting software that they're using, and make a determination if the reporting, is accurate, because garbage going in and will be garbage coming out. So, hard to really kind of justify and advocate for a company to get a line of credit if the information does not have the integrity that's needed in order for us to actually, have confidence in it. So, am I still sharing? Okay, I think I am. I'll go to the next slide. So I've kind of covered this in a sense of, our objective is to identify key elements that are necessary to effectively provide the technical assistance and a training designed to build the capacity of the beneficiary businesses. I need to say that all of our services that we provide for businesses is free to the businesses. There's no cost for the services that we provide. We start off in making a determination of who we would actually, will work with. We do a business assessment when we're recruiting a business, and that assessment is what we call a SWOT analysis. It tells us the strengths, weaknesses, and opportunities or threats for each one of the businesses, so we can see what challenges are there other than access to capital that might be, preventing them from scaling up. Then we develop a technical assistance action plan with those businesses and provide that one-on-one strategy to help that business to understand, how to, like I said, overcome whatever challenges that are there, and then to scale up that business so that they're more viable for those lines of credit. We also provide trainings, estimating training, peer-to-peer learning opportunities or mentor protege. We've established a lot of those relationships as well. Certification assistance. We try not to scale up businesses that have not already attained their minority certification. But we will provide that certification assistance where needed. Okay. So in increasing, our objective in increasing the funding and the bonding capacity, we make a determination, like I said, if these companies are primed for lines of credit. We generally don't focus in on equipment loans. We're just now probably completing our first facility loan that we're working with a contractor where he's buying a huge office in order for him to actually go and, put his business more into the manufacturing as well as doing the construction, business at the same time. But generally what we do is we're just looking for companies that need that gap fill or need the lines of credit. We also determine which companies are prime and ready for them to be graduated. When we talk about graduating, if you start off a business at maybe $10,000 or $50,000 line of credit, and as we see that your capacity is growing and you're getting more projects, generally, and you're showing a favorable repayment, type of a habit where you're revolving that line of credit, then we'll put you in for an increase. So we've done that to the tune of, I think we've done 21 loans. Of the 32, 21 were increases where they might have started off, they were initially at a lower level and got increased to a higher limit. So we're very excited about that aspect of it because it shows that company is increasing, like I said, in their capacity. The technical assistance and financial literacy, like I said, along with the loan committee oversight, is what really sets our access to capital apart from some of the other organizations that are providing access to capital, because we're pretty hands-on. And like I said, we want to make sure that company is successful. We also want to make sure they're not biting off more than they can chew. And then we actually track all of the information and the economic impact that comes behind it. And this is very critical because as we're looking for more lenders, construction has not been the favorable industry, in previous history for banks and lenders because they saw it as not being as stable. But right now, with the way that we have the infrastructure bill that just got passed and all the mega projects that are not only existing here in Chicago, but most major cities, construction actually is really becoming a strong force in the recovery of the economy. And so there's an increased interest in banks. But what we do is show the economic impact of how those lines of credit are helping those businesses to scale up and take on more opportunities. So we track all of the technical assistance that we provide by race, by trade, by gender, by union or non-union affiliation, by your capacity, because we want the jobs that are created, the revenue growth. We want to make sure that, we're now becoming more, increasing the appetite, I should say, for all the funders. when they see that this is a really viable industry, which we all know that it is. And like I said, it just increases their appetite for more business. So again, access to capital, HIRE360 Business Development Program. We do the vetting, we do all the preparation for the financing and assisting the small business owners who have any credit challenges or collateral gaps and limited experience. And again, you see our numbers are there, 32 loans totaling over 5.5 million, and then the assistance that we provided for the PPP loans as well. So we know that it's one of the most significant challenges that are facing minority businesses. And when businesses have a difficult time getting loans, sometimes their only recourse is to self-fund with a credit card or to borrow from a family member or get some of those high interest non-traditional funding. A revolving line of credit can help when you have unexpected cash flow gaps or when you want to take advantage of the new opportunities to bid on more projects that come up. They really play a pivotal role in helping those businesses to accomplish those things. Okay, let's talk about some of the I know this is really small writing, hopefully you guys can read it. Some of the loan review process that we go through. Again, we look at the information about that company and look at their initial financials, do the initial review over those businesses. We look at the balance sheet and the P&L statements. We look at your current capacity and then ask what your objective or what you think your capacity could be given the overcoming of those challenges. So an example of that is if your highest contract had been 50,000, but that given the opportunity to get access to capital and with some additional technical assistance that you'd have the capacity to maybe do 200,000, then we would look at how to, like I said, to eliminate those challenges and help you to accomplish your goals. So some of the loan eligibility requirements, the target market that we look at is minority and women-owned businesses. The loan amounts that we're working with so far, a minimum of 10,000. We say a maximum of 2 million. We have not done a $2 million loan. I think our highest is close to, we might as well say if we round it off as $1 million. But our goal is to stay within that for each business, a minimum of 10,000 and a maximum of 2 million. How we accomplish that is that we have different funders that we're working with, some that might cap out at 50,000 and others, like I said, that'll go all the way up to 5 million. The use of the proceeds for the loans are just for working capital. We also look at, the persons that are evaluated, anyone that has 20% or above ownership of a business would have to provide all of their financial information to be reviewed. Bankruptcy is a no-no. No active, I said bankruptcy, I should say. So we cannot do any loans for any companies that have, the guarantors have any active bankruptcies. If it's been released and, sometimes it's different from different funders, it's how long they want to see that bankruptcy released. But again, no active bankruptcies. Collections, if there's collections, there needs to be a strong explanation as to, why there's collection activity. Judgments, the same thing, no open items. But, if there's judgments, generally what would happen is that those judgments would have to be paid off as a part of or any tax liens or whatever, they would have to be paid off prior to those loans being actually approved. Credit history, we want at least 12 months of credit history. We have, a lot of times people think, well, if they don't use credit, that's good. And that's not good in the sense of trying to be bankable. Showing your repayment history and showing that you have good credit is really paramount in getting you approved. Other things that we consider, again, we try to work with mostly the minority certified businesses. We do encourage or really kind of require that you have active contracts because that shows that you have the ability to repay the loans. So those active contracts are what we would call a WIP report, a work in process. along with projections of, contracts that have won and maybe have not gotten started. All of those are really, key in getting approved. We look at, I say 2 to 3 years, but generally, no less than 3 years of personal and business tax returns, along with your previous full year balance sheet and P&L, and then any interim balance sheet and P&L. So when we say interim, we would say that now we're into November, and if we were going for a loan, we would want to hopefully be able to at least see interim, balance sheet and P&L statements that are through at least 9/30, 2021. And then if there's any actually compilation type of reports, we'll look for those, or comparisons where we can see what happened between the previous year and this year as well. Personal financial statements are necessary because they want to see, exactly what the guarantor has as far as their liabilities and assets out there. And again, I already said a resume of the owner, and then a company capability statement. Aged accounts receivable and payable reports are very important because those receivables, are an indication to the funder as to, that you've already, completed work and you have an ability to repay those loans based on how your receivables are coming in. And this is another, I guess, thing that we help with, because traditionally, if a bank saw 90 days due on any type of receivable, it would not be in consideration towards repayment of the loan, because they would think that was, something that was stale that would probably be get written off. But we all know that in the construction industry, it's not unaccustomed, we're not unaccustomed to having 90 days be, the time frame it takes to get the first payout. So that's not, something that should create a red flag necessarily. So just helping to educate the banks and have them understand how the construction industry works has been very critical. Because again, like I said, they see accounts receivable for 90 days, they think there's something wrong. And like I said, it's more business as usual with the way the construction industry works. And the WIP report, I explained that's your work in process report. And it just says, I'm, maybe 10% completion on this project that was $1 million. And we've done $100,000 worth of the work, and we still have 900,000 left. And then when that project is anticipated to end. Okay, so businesses are eligible to be evaluated for HIRE loans based on them meeting some of the following criteria. We want to make sure that they've at least 90 days at the limit that we've got them approved at initially, and that they've been showing that they, have been revolving that line of credit, and then basically have received additional contracts or additional businesses that would warrant us, putting them in for an increase. And then they have been following the technical assistance guidance that we have been giving them. Those are all criteria that we use as a determination of whether or not we're going to move forward with businesses to increase their line of credit. So your chances of getting a credit line largely depends on a few things: your qualifications that we've already discussed, the lender, that we're working with, and the type of credit line you want. Most line of credit lenders require businesses to have at least a few years of history and healthy revenue numbers to qualify for a line of credit. Larger lines of credit may require additional requirements such as collateral. This can all seem intimidating, especially if you're a new business. We suggest that you review your credit score and your finances. Your credit score and financial history are a big part of your business line of credit application. A higher credit score will give you a better chance of getting approved. Compare your lending options to get an idea of how well you qualify for a business line of credit. Check the requirements. Traditional banks tend to be sometimes a little harder to qualify than other types of lenders. Know the cost of actually getting that loan. Like we said, some businesses have resorted to very high, maybe non-traditional lenders that charge exorbitant fees. And, whereas that's not good, what I do encourage and try to make sure that they understand is the cost of getting loans is something that you actually pass on in your estimates as well. A lot of companies miss that, and they don't know that that's not something that they're supposed to absorb. That is supposed to be passed on into the cost of doing business as well. And like I said, some lenders are a little bit more costly than others, but make sure you know what your interest rates and your fees up front from your lender, and gather all the documents that you need to apply, and make sure that you understand how those documents, are really interpreted by the business, banks that you're applying to. Because if you understand what they're looking for, then you're better prepared to make sure that, like I said, that you're tracking that information properly and reporting that information properly. So that's a lot in a short time frame. And hopefully I didn't talk too fast and
No, it was a lot of great information.
okay. All right, so that pretty much concludes my presentation on access to capital. And if there's any questions, I am more than happy to answer them at this point. I
So,
think
Deborah, you probably have already answered this,
hmm?
but you probably
Okay.
have already answered this.
Mm-hmm.
But how does Hire 360 work with some of the other local CDFIs and other institutions for like folks who may not qualify for the loan pool at Hire 360?
We have not. I can respectfully say that, and Maureen could attest to it. She's on here with us, and she helps us with. She's not a traditional bank; she's a CDFI. So what we've done is we got relationships, Pam, with different entities, so that we can pretty much have representation that meets the needs of the different, businesses that we're working with. So we work with CNI, we work with CIBC, we work with CRF USA, we work with Providence Bank, with Wintrust Bank, so we have such a, I guess a spectrum that we work with. We have not run into that.
That's good to know. That's good news. I'm certain it's encouraging for the folks who are on the call or the folks listening to this information.
Mm-hmm.
Okay. If we have no other questions from the other attendees, I'm going to yield back, 26 minutes of your day?
Wait, this is Maureen. I just wanted to add that as a lender, one of the things that makes it so much easier to be able to qualify a business to get a loan is the readiness for which their loan readiness. And when they come loan ready to get a loan, it makes it so much easier because it doesn't take as long. Many times these contractors need money yesterday. And so the more prepared they are when they come for the loan, the easier the process is. And you can see from the diligence that Deborah has put into this, and the exactly what she put together is what we would require. And so having it at the ready makes that process just so much easier.
I can imagine. So it's much the same when you hear from certification officers in saying that the more you have the information available, the faster the process can actually be. So we do have to make certain that folks seeking these kind of services and resources actually do their due diligence, right? As you and Maureen have spoken to about making certain that they have all their ducks in a row, so to speak.
Mm-hmm. Absolutely. Let me just add, there's a tremendous amount of opportunities in construction right now. And I don't see most businesses being able to have the ability to scale up and have the capacity to take advantage of it to the extent that they would need to without having some kind of working capital. It's needed, it's necessary. And like I said, just being able to have that knowledge and the information of what's required and be able to, meet that requirement so that you can go and get those lines of credit, it'll just open up so many more doors for these businesses. So I encourage, companies that do not already have working capital to make sure that they, whether they work with HIRE360 or any other entity out there, that they make it a priority.
All good stuff. All good stuff. So Deborah, thank you so much. for dropping all your little gems on us today and all the good information. I do hope that people take advantage of all the resources that HIRE360 and you and your team have to offer there, because you are absolutely right. There's a lot of construction happening in our market right now. We definitely want to make certain that folks are ready and ready to do the work. So thank you again. Thank you again for everyone who's taken out the time to actually share with us over their lunch hour and hear about all this great information. So be safe and be well, everyone.
Thank you. Bye now.
Thank you. Bye-bye.
Bye-bye.